Hi, my name is Marie Tennessee. I'm principal of Tax Key Tax Consultants. And I'm looking forward today to going through with you some of the main issues that arise on property transactions in relation to VAT, be they property sales, property leases, development of property. There's a lot of very complex tax rules that apply from a VAT perspective with property transactions. So we have quite a packed agenda today. So we're going to go through initially some of the basics around property transactions, some of the most common definitions, the difference between, say, what is regarded for VAT purposes as a new property versus an old property, the special rules around sales that are made by property developers as defined in the legislation, also where properties are partially completed. These are particular scenarios that can throw up certain VAT treatments. So we're going to look at some key exemptions from VAT. We're going to look at the capital goods scheme. That's where the use of the property is monitored over its VAT life, which can be generally 20 years, and for additional development, then we're going to look at the 10-year. So quite a long VAT life for properties in Ireland. We look at transfer of business relief. That's where the sale of a property is actually outside the scope of that, and what that means and when it arises for the parties involved. The VAT treatment of leasing and letting commercial properties, what that looks like and how it affects landlords and tenants. We will look at the waiver of exemption, and that's a feature of the pre-2008 VAT rules that still comes into play today. At the end of the slides, there's some case studies for you to look at then at your leisure.